Joining us is Clive Thompson, who's a retired managing director of wealth management at Union Bancaire Privée. I can't pronounce it very well. Geneva, Switzerland. He's had an unblemished career of 47 years in the wealth management business. Welcome for the first time to Geopolitics and Empire, Mr. Thompson.
Hello. I hope I can pronounce your name right. Is it Hervoyer?
Yep, you got it. And by the way, it's been a while since I've spoken to someone in Switzerland, but I spent a wonderful year of graduate study in Geneva at the Geneva School of Diplomacy, right across from the U.S. mission or embassy and near the ICRC, and a hop and a skip away from the old League of Nations. How is Geneva and Switzerland these days?
It's a fantastic place, both to live and as a tourist. You probably know that Switzerland has one of the highest salaries in the world. Maybe not the highest, but it's certainly the top three. So we have huge numbers of people from everywhere trying to squeeze into little Switzerland to get a job. Now, that has an advantage if you live here, because it means most people who are actually working in Switzerland are very motivated, because there's a huge army of people waiting to take their jobs if they're not actually adding any value. So it doesn't really matter whether you're talking about the guys who sweep the streets or the guys working in the law firms, accountancy firms, or banks. They're all doing their absolute best to be better than the ones who'd like to have their jobs from somewhere else.
Indeed, that's how it is. It is. My fate took me around the world, but Switzerland is a wonderful place, and I've been enjoying your interviews for quite a while, and I thought, why don't I finally get you on? And people can, if they just type your name into YouTube or Rumble, they'll find a lot of interviews that you've given, and I want to get your thought on the state of the economy. My impression is that we are eventually headed off a cliff of sorts. Indicators, I've had some guests say that we are already in a recession. Bank losses seem to be mounting. Inflation is raging. Individuals and countries are starting to buy more gold. National debts are going supernova. And you also write on your LinkedIn, quote, "The post-Bretton Woods monetary system is drawing towards the endgame. The levels of government indebtedness continues to increase faster than GDP. This won't continue forever. Sooner or later, something will break," end quote. So I'd like to ask you where you think we're at.
Well, let's just take the last point first. Certainly around the world, governments have got into the habit post the 2008 financial crisis, global financial crisis, and post-Brexit, post the COVID pandemic. They've got in the habit of spending a lot more money than they collect in taxes. Now, during those pandemics, there were a lot of handouts, there were furloughs and all kinds of schemes by the governments. The trouble is, having got in the habit of overspending, that overspending is not drawing to a close. It's actually getting larger, and particularly the USA. I think the USA is the focus point of the work where we're looking, because the figures are available and they're there for all to see. What we are seeing in the United States are widening deficits. They're spending a lot more. The number of people who are actually working in the United States, despite the so-called fantastic non-farm payroll numbers, the number of people working in the United States this year is less than it was a year ago. The number of people unemployed in the United States is more than it was. And the numbers, or the non-farm payroll numbers, are being goosed by the government employing hundreds of thousands of new workers ahead of the elections. So these numbers are not telling the true picture. The number of productive workers in the United States is dropping. So there we have the question of whether we're already in a recession. There are less people actually producing things in the USA this year than there were last year. And it's a lot less. And it's a lot less in the face of well over 1 million immigrants coming into the United States in the last year. So there is an argument that we're potentially, at least in the United States, already in a recession. I'm not saying we are, because the official figures don't show that, and the GDP figures were just revised upwards, and you don't have a recession officially unless you have two negative GDP quarters. But there is no doubt there's an awful lot of people, not only in the United States, but everywhere in the world, who are struggling to find a job, who are struggling to make ends meet. They're finding that the prices are rising on them, and it's getting very difficult for many, many people to live. And we're kind of splitting into two worlds: the worlds of the haves and the world of the have-nots, where one half of the world is, and it's actually much less than one half of the world, but a small part of the world is doing very, very well, and the rest of the world is living very much hand to mouth, and to quite a large extent these days on credit.
Just to explore that a bit further, because that's also something I've been worried about. Academics such as Joel Coutts can talk about this neo-feudalism, sort of eroding of the middle class, and us ending up kind of like the Middle Ages, where you have this 1% and 99%, and you're seeing it around the planet. Like, I talk to people all around the world. I'm here in Mexico. I'm also a U.S. citizen and a Croatian citizen, and you talk to full-time professionals in the U.S., in Mexico, and housing is becoming more just unattainable more and more. The prices keep going up, and so forth. And so, do you see this trend of, would you call it neo-feudalism?
Well, I wouldn't call it that, but I'm going to say housing has always been difficult to acquire. It's just got more difficult. But if I can recall a little bit, when I was young, I started work at 18. Well, actually, I started at 16. My first job was working as a bingo caller, calling out the numbers while I was still going to school. And I was doing that after school to earn a whopping £25 a week, 7 days a week. But I started work at the age of 18 in London, and I absolutely wanted to buy my first flat, and it was obviously not easy to do without help from your parents. So I did manage to get a loan, probably about the age of 21 or so, from my parents. But even then, to pay the mortgage, we had interest rates of 12 or 13% at the time. And to make ends meet, I had no television, no telephone. I wasn't eating any meat. It was basically things like rice and pasta. There were no outings to the pub. There were no meals out. I had to move in a lodger to help pay the rent. So actually, that kind of, I ended up marrying her, to tell the truth. So there was a sort of double benefit there. But it was tough. And I, of course, when I started work, I kept my night job, so I was working two jobs at the time. So it was tough. But I think to these days, if you want to buy a home, you've got to have both partners working, and you probably need to find another source of income. You probably need another person in the house, a third lodger, to help pay the rent. So perhaps you need two people working, two people doing double jobs. Maybe you probably don't want kids, because if you've got kids, it's going to be almost impossible to buy something unless you both have very high salaries. So yes, it's become very difficult. But the trouble with housing is the governments of the world are borrowing money and spending it on everything. But as they spend money, the world gets richer. And as the world gets richer, because the government's spending the money, someone somewhere has got more money, and he can afford to buy that house that you've got your eye on. So there might be 100 people with their eye on a particular house, and perhaps there's a limit at, I don't know, $200,000 or whatever it happens to be, to buy that house for the person who can afford it most easily. But if everybody's now suddenly got more money, at least one of those people is going to have enough money to afford $220,000. So it's only normal that the price of the house will rise and be out of reach of the other 99 people who've got their eye on it, because only one guy is going to get it, and the guy who's going to get it is the one with the most money. So it really is a struggle to get on the housing ladder. I didn't quite finish off the question about the end game earlier. As I said, the governments of this world are increasing the level of debt because they're spending a lot more than they're taking in taxes. That's called the budget deficit. And so to find the difference for their extra spending, they have to borrow the money. The trouble is, in the United States, the level of debt versus the economy, that's called the debt to GDP ratio, the debt is rising faster and faster and much faster than GDP. So the debt to GDP ratio is increasing at a rapid pace, and it's gone way beyond the levels which are regarded as sustainable. So nobody can say exactly what level is sustainable, but just to give an indication of that, when the European Union was being formed, it was widely thought that 60% debt to GDP ratio was the maximum that any country should have. And you couldn't join the EU unless you had a debt to GDP ratio below that. At the time, the UK was around 40%, and many other countries in Europe were, or all countries who joined the EU at the time, were below 60. Well, in Europe, we're at an average debt to GDP ratio in the 80s. In the USA, it's in the hundreds at the moment. Japan is something like 250, 300. Those debt to GDP ratios have gone up to levels which are completely unsustainable. And the problem that they're facing now is one of rising interest rates. Because when you have a high level of debt, you have to pay interest on that. Now, as the governments were increasing their debt over the last 10, 15 years, since the 2008 financial crisis, interest rates effectively, for a long, long time, for a decade, fell to zero or below in Europe. That meant that the governments could continue to borrow more and more money, but paying less and less interest because the interest rates have fallen. So if they borrowed a new, what they would do, they'd sell a bond. The interest rate on that bond would be lower than the last one. So their interest expense wasn't actually rising very much. But that has now turned itself on the head, because interest rates are now rising, and that old debt, which was where they borrowed money at 1 or 2%, is coming to maturity and has to be renewed. They can't repay it unless they borrow some more. So as it gets renewed, that new money has to be borrowed at a much higher interest rate, probably double what they borrowed at previously. So that means that the interest expense is now increasing on a level of debt which is way higher than it was a few years ago, a decade ago. And that's going to accelerate as the remaining debt continues to mature and has to be renewed at higher rates. But on top of that, you've got the extra spending that, i.e., the debt is going up because the amount they're spending on social programs and wars and pensions for the old people and all these sort of things, that is rising faster than the economy is growing. The taxes are not that they're collecting are not going up that much. So really, there's a growing, that debt is starting to grow faster and faster. One, because of the extra spending, but two, because the interest expense is rising rapidly, and that we will ultimately reach, and it's less than a decade in the USA, we will reach a point where the interest expense exceeds the entirety of what they can collect in taxes. Now, I know if this was a family, that would be a big problem. If your debt servicing costs are exceeding the entirety of your income and you've got nothing left to eat, that would definitely be a problem. You're only going to declare bankruptcy. Now, that doesn't particularly happen to governments or central banks. They tend to say, well, especially if it's a country which has its own currency, they say, well, that's fine. We'll just print some more. We'll print our way out of this problem. So we can continue to pay the interest on the national debt without defaulting by simply printing the money. So I'll talk for a second maybe about how that would work in the USA, and it's the same around the world. When the government needs to spend extra money and borrow money, it has two places it can turn to borrow that money. One is the public at large. That's you and I, your pension fund, foreign nations, which would include China or Japan, who are trading with the USA. So if they sell their goods, they get in dollars, and then they invest those dollars into treasury bills or treasury bonds. That's when the government borrows. The government borrows, it puts in treasury bonds. So that's one way. But if the market gets indigestion, and we're not really at indigestion now, but I think we're not very far away from it, then the government has a second source of borrowing, and that's from the central bank. So what the government does then is it prints a bond, let's say 100 billion, and says to the central bank, we'd like to borrow 100 billion, please. And the central bank then prints that 100 billion, new money, gives it to the government, who spends it. So we have what's called an expansion of the balance sheet of the central bank. That's what we've seen around the world, at the same time as we have an expansion of the amount of debt owned by the government. But as I said, it's not a household, but there's got to be a point where people say, if I lend money to the government, what I'm going to get back isn't going to buy me anything. And then we get into this sort of debt crisis, and the price of bonds start to spiral downwards. That means interest rates are going upwards because people are demanding more and more interest to protect themselves against the risk they're not going to get paid. We don't know if that will happen or when it will happen, but my feeling is we're getting very close to the end game. And, when I say close, I think within the next decade. I don't mean tomorrow, but the trouble is these things can come out of nowhere. We have what's called black swan events. These are things which happen, but nobody is expecting it to happen. They call them, it's a 1 in a billion chance or 1 in a million chance, but there's a billion things which might happen, which means the chance of a black swan event happening at some point is actually quite high. You just don't know which one. So each individual black swan event is a very, very rare event. It's not supposed to happen at all. But sooner or later, along comes some black swan event which rocks the boat and will cause a financial crisis. And at that point, the government's forced into action. So, it might be a war, it might be a pandemic, it might be a natural disaster, it might be something completely that we haven't even thought of, like a major bankruptcy. We just don't know where it's going to come from. But when that happens, the government has to take emergency action, and that basically means that there is probably going to be some kind of reset. Now, reset can take many, many forms. It can be a replacement of the currency. It could be take the form of capital controls, where you're told what you can and can't do with your money. It could take the form of ration coupons, where you're told you can't actually spend your money unless you've got a ration coupon. We had that in Britain during and after the Second World War, where if you wanted, you could be a millionaire, but if you wanted to buy a pound of butter, you couldn't do it unless you had the ration coupon to go with it. So what was the real currency? Was it the £1 million you had in the bank? Or was it the Russian coupons? Well, this is where I'm going to come to. We're coming to potentially around the world something called the CBDC, or it's called the central bank digital currency, which is a digital form of the dollar, a digital form of the pound, a digital form of the yen, digital form of the euro, and so on. So each country will have their own central bank digital currency. Now, there's a lot of opposition to it, and I have my reasons to be opposed to it, but I think it's one of those things which is kind of unstoppable. I hope it can be stopped, but I don't think it can. But this is just another example. Let's say we get the CBDC arrive. Well, that's going to be another form of ration coupon, because they're going to say, not immediately, but after a while, they'll say you can't actually spend your money unless it's in your CBDC wallet first. So you want to buy something, you want to make an investment, you want to buy a house, you want to go shopping, put the money in your CBDC wallet first before you spend it. Because that way we can make sure you're not money laundering, we can make sure you're paying all your taxes, we can make sure you're not a terrorist, etc. So that's the only way to operate. But of course, at that moment, you've got a control of what you're doing with your money. And you might be a very wealthy person. There might be a crisis going on, and they don't want everyone rushing down to the shops to buy toilet paper. So they say, well, there's a bit of a crisis at the moment. We're going to restrict everybody to $20,000 or £20,000 in your CBDC wallet per month. You can't spend more than that. It's got to be enough for everybody. So if you want to put money into your CBDC wallet to speculate against the dollar, sorry, you can't. So that would be another form of, inverted commas, a bit like ration coupons. We had another form in all through to the 1970s in Britain, which was called exchange control. You couldn't do anything with your currency without the permission of the central bank. So, for example, when I traveled abroad for the first time, we were restricted to taking £50, maximum £50 of currency abroad. So you could go to the bank and you'd buy your £50 in Deutschmarks or whichever country you're going to, and they would stamp the back of your passport with the amount you'd taken, and you couldn't then go to the next bank and get another £50 because you'd already taken it. So I can't remember if it was £50 per trip or whether it was £50 per year, but basically it was restricted. If you wanted to buy foreign shares, which was basically speculating against the pound, you simply couldn't. And in fact, they had a two-tier exchange rate. They called it the dollar premium. So if you happen to have South African shares, for example, in rands, and you wanted to bring them back to the UK, you could get a better exchange rate by cashing in your rands because than the official rate, because the bank was on, there was the official rate, but there was what's called the dollar premium, which meant money leaving the UK had to pay a lot more than the official rate to get the foreign currency, and money coming into the UK could benefit from that two-tier exchange rate. So it was kind of a way of sticking to the old Bretton Woods agreement of the dollar having a fixed rate against the pound, when in fact the reality was not at all that.
And I want to step back for a minute. You said that you believe the CBDCs are inevitable, and of course you're against them. And I feel the exact same way. I'm totally against the system, but I just see it marching forward. And I've had on a number of folks. I really enjoy his work as a historian, the Jewish American historian Edwin Black, and he's given a name to this system that I've liked and tried to popularize. He calls it the algorithm ghetto. In China, they call it social credit, right? In other places, cyber gulag or electronic concentration camp. And, when you say you have reasons to oppose it, 2 years ago, when my Department of Homeland Security rolled out the Disinformation Governance Board, that week, they took me down from, I'm banned from using PayPal simply for thought crime. Right. And so we can see this if we just extrapolate for any manner of thought crime and, just thoughts that are, wholly innocent and in a free world would be normal. You can have your account shut. And so just any further thought on, this road that we're heading down?
Yeah, I mean, first of all, the idea of the central bank digital currency is that it will be programmable and it will be something they can monitor very easily. And we're seeing that obviously in action in China, where people are being restricted from travel and all kinds of things because their social score is not high enough. But what does that mean in practice? Well, in the early days, it doesn't mean anything in particular. And I certainly have nothing to worry about because I don't think I'm going to be committing any crimes or doing anything that the government doesn't really approve of, unless they don't approve of me not buying their government bonds. But that's not really a crime when you don't do something. But I rather fear the central bank digital currency, not for myself, but more for my children and my grandchildren, because I think we're going to get this sort of creeping control until we ultimately end up in some kind of dystopian society where you're totally controlled through your wallet. So in the early stages, it'll be relatively free, but they will say, we are monitoring what you do because we have to check that everybody is paying their taxes, and we're monitoring what you do because we don't want any terrorists or money laundering going on. So we're going to make it that there's that control. We're all going to say, well, that's fine, no problem. I'm not a money launderer. I'm not a terrorist. I do pay my taxes, sort of. Some people say that, but people are probably going to just accept that. But what if they go to the next step and they say, we're handing you your benefit check because you're unemployed, but we've noticed that you're spending it on alcohol and gambling. So we're actually going to restrict it now. So when you get your money from the government, you can only spend it on food in Tesco's. Okay, well, probably that's not such a bad thing. Some people would say the unemployed shouldn't be spending their money on alcohol and gambling. Perhaps some people would say. I'm not judging here. I'm just saying what people might say. But then they might get to the next stage and they say, well, some people are eating too much meat, so we're going to restrict them because meat is bad for the climate. Obviously, the cows are emitting carbon dioxide all over the place and damaging the planet. Then they might say, We've noticed you attended a demonstration last week against the government or against some policy. Well, just to make sure that you don't do this again, we're going to restrict your travel. You can't travel into big towns anymore because you can't buy a ticket. And where does it go? It starts off gently, and then it can get tighter and tighter and tighter. And these little steps of adding restrictions will come in such small steps that the people will barely notice. It's not like we're going to go from day one, where you can do everything like you can with your cash today, to day two, where you can do nothing. It'll be so slow and gradual, each step on its way. People say, well, that's for the public good. But ultimately, they'll be living in a prison.
Yeah, I see it the same way as you outlined, that in the beginning, not much is going to happen, but then slowly over time, the walls will close in. And, we've had Nigel Farage, whatever one thinks of him, he was debanked. David Icke, whatever one thinks of him, his ban from visiting Europe was just renewed for 2 years. And a Kuwaiti minister, this was news just a few days ago, he ended up for some reason following me. I liked his post. He's got over 300,000 followers on X, and he followed me back because I was sharing a story. He's a former Kuwaiti minister. And I think he was traveling from Europe, Italy to Kuwait, and he refused to. They have this new biometric system, and he refused to do it. And they sent him back, returned to sender, sent him back to Italy, which is illegal, unconstitutional, because you can't deny a citizen entering the country. But this is where we are going, and I'm just curious. You also wrote on your LinkedIn that you're retired, but you're still in daily discussions with wealthy and not so wealthy individuals on a number of topics. What do perhaps any of your peers or other people in the industry think about this situation?
Well, I think a lot of people just want to get on with their lives and not think about it at all. There was a petition about the central bank digital currency to the UK government, and we needed to get I think it was 100,000 signatures for the government to actually discuss it. And despite this petition being available everywhere, I think they got some tiny number of signatures. Maybe it was 30 or 50,000, but they never got to the required number. So it didn't actually get to the required number to force the government into a debate on the question of the CBDC. So as far as the Bank of England is concerned, it's coming. And they're busy. If you look at their website, you'll find, last time I looked, they had plenty of job offers for central bank digital currency specialists. There is no doubt in my mind that no matter whether we think it's a good thing or a bad thing, it's coming. And of course, when it arrives, it will arrive with lots of promises that we won't use the potential powers of this technology for any nefarious purpose. But they will over time.
What also is interesting then, okay, so we kind of get this is where we're going. And I want to get your further thoughts on that transition moment where we have this pile of old debt. And I've heard you talk and say that's sort of going to be forgotten about because it's that old debt. And now we're moving into this new sort of digital dollar, digital euro, digital Mexican peso, digital everything. And we're going to transition to this new system. How are they going to deal with this old debt? Is it just going to sort of fade away? And then will there be some sort of world reserve currency? What will happen to the dollar? It seems like the U.S. is also experimenting with Bitcoin or backing the dollar with Bitcoin or having a digital dollar. So thoughts on some of these issues?
So there are countless ways in which a currency can fade away. I have a banknote collection going back some hundreds of years for all kinds of banknotes which were issued over the decades by over the centuries by different countries. A lot of those banknotes have many zeros on them. Some do not, but none of them exist today. They've all gone out of existence. In some cases, they were replaced by a new currency one for one. So, for example, if you were in Germany and you had Deutschmarks, you did get euros on a fair basis. But in other places, they whacked off a few zeros off the banknotes. And in some cases, they basically said, if you've got more than X, you're lending it to, that was Brazil. If you've got more than X, you're lending it to the government, no questions asked. And they basically, the government helped themselves, paid you interest on it. But when you got it back, it was effectively worthless. even though it was still not a default. You got back what you paid in, but to the government, but it was effectively worthless currency because of the intervening inflation. Now, one of the ways in which a currency can be replaced or come to an end is when it's replaced by a new currency, and you effectively have two currencies operating side by side. And that's where the CBDC could come in. So the central bank digital currency is a likeness of the currency you have in your bank. So the currency you have in your bank, it's a liability of your bank, not of the central bank. The cash in your pocket is a liability of the central bank in theory. And what you have in your central bank digital currency wallet, either on your telephone or the one which will be held by your bank, that's a liability of the central bank. Effectively, that means the country has two currencies like dollars and cents. 100 cents is a dollar's 100 cents, just like we had in America back in the 1920s and 30s, where $20 was an ounce of gold, roughly. It was actually $20.67, but $20 was an ounce of gold. An ounce of gold was $20. And the $20 was a representation of the gold. So the gold was the currency, the dollar was the representation. So as far as the public was concerned, it looked like just one currency. The dollar was gold, and the gold was dollar. So if we get to the central bank digital currency, it'll look like the same currency. The money you have in the bank and the money in your electronic wallet, your CBDC wallet, will look like the same thing. And you can move money from left to right as much as you please. And you're going to say it's like 100 cents equals a dollar. And that's all good until you find it's bottlenecked in some way. Bottleneck means you need permission, or there's a limit as to the amount you can move, or you need a valid purpose, or it's just bottlenecked because the government's in a crisis and can't pay the interest on the national debt, and that or the interest on the national debt is so enormous that it's causing hyperinflation or very high inflation, and they have to do something. So the way you reduce inflation is to stop people dragging up the prices by spending their money. So what you do, you bottleneck how much they can spend, and if they can't put it into their central bank digital currency wallet, they can't spend it. What does that mean? We now have effectively two currencies. We have the old money, which you can't spend, and the new money, which is in your CBDC wallet, which you can spend. So what's going to happen? The old currency is going to be worth a lot less than the new one. In fact, I can tell you the day they bottleneck it, the day they restrict it, it'll be worth 30% less that week. And within 3 months, it'll probably be worth 70% less, 80% less. And within a year, it'll probably be worth nothing. So what then happens, this is, by the way, I just want to stress, this is just one possible way. There's many other ways we could talk about, like high inflation, where they inflate the debt away and things like that. But I'm talking about this default. I don't think defaults are possible. But in this particular scenario, we effectively have two currencies, but one of them is going out of existence very rapidly because nobody will take it because they can't spend it. You can't pay your taxes with it. Nobody wants it as their salary, and so on. So what then happens is we now have a world where all that debt, which was denominated in the old currency in dollars, is effectively becoming worthless. Now, that's really good news, in a sense, for those who have borrowings. And who's got the biggest borrowing? The government. So it's really good news for the government if the old currency can't affect their economy because the public at large are not allowed to spend it through this restriction of what you can move to your CBDC wallet. So you can speculate as much as you like with your old currency, but you can't do any damage to the economy. And you go and try and buy something with the old currency, and you'll find that it's a lot more money to buy it in the old currency. Maybe it goes to infinity to buy something that is in the new currency because nobody really wants to take that old currency because they can't actually spend it or use it or do anything useful with it. So that would be good for the government because their debt to GDP ratio would effectively have gone to zero because the old currencies become defunct and now they can borrow as much as they like in the new currency, and even if they borrow so much that they need to they want to bail out their citizens, they bail out all the pension funds who used to hold old government debt, the domestic pension funds, I mean, not the foreign pension funds. They bail out those who, in some way, shape, or form, suffered so they couldn't eat. So pensioners who had a pension income in the old currency will find they're getting something in the new currency. There'll be probably a universal basic income, but even after all of that, their debt to GDP ratio will probably be less than 20% compared with the hundreds of percent they had before. So great for the governments, great for the man in the street, provided that the powers that be allow his mortgage to remain in the old currency. Now, I say that because we don't know what legislation will come into place. I mean, it's not, the bankers aren't going to really like giving up on their assets and liabilities, because that basically will make the banks effectively worthless or worth an awful lot less. But it could well be that you find that your debt, your credit card debt and your mortgage, which was negotiated and agreed in the currency of today, remains in that currency. So there's a lot of precedent for that. Around the world, when currencies have failed, those who've borrowed money have done very well, because they continue to own the asset that they bought, and it's worth what it is worth. But the old currency, which they now owe something which has become defunct. So the man in the street, if he has a mortgage or a credit card debt, might be very, very happy. Well, that's great for the economy, because it means that the man in the street now has more money in his pocket to go and spend in the shops. And of course, the fact that his mortgage has become effectively worthless means he can rehypothecate his house, as people tend to do, to go on holiday and do all the sorts of other things that people like to spend money on. We live in a world where many, many people, large proportions of the people, the population, like debt. And part of the way they think of it is that their house has gone up in value, they can afford to borrow more. So that would be great for the economy, because people will be spending more. It'll be great for companies, because the income from that extra spending will be coming in from the public at large, and companies will find that their borrowings, their loans, that they borrowed, where they borrowed from the banks or where they borrowed through a bond, those are denominated in the pre-existing currency, and effectively that's going to zero. So the companies will be reporting a currency gain, because the value of what they owe has gone down, and effectively their balance sheets will become more solid, which means they can invest money into factories and new staff and research and all kinds of things. So from an economical point of view, it'll be a great thing. From a control of mankind point of view, it's a very bad thing, because mankind is now controlled and can't do what he used to do. I think the man in the street, from a financial point of view, will be just fine. The man in the street is not going to see any impact at all. His salary will be in the new currency, his expenditure will be in the new currency, his taxes will be in the new currency, everything will be in the new currency, and anything he happened to owe, which is a lot of people, will effectively have become worthless. So the man in the street can be just fine. But out there will be many bag holders. What's a bag holder? It's someone who holds those dollars. Those dollars aren't going away. They're still going to be there. They're just not going to be worth anything. So if you have, let's say, a bond fund, it's full to the gills with dollar-denominated bonds, possibly hedged back into your domestic currency. Effectively, those dollar bonds are going to be worth nothing. You'd like to be compensated by the government? Well, unless you can't eat, they're not going to compensate you. And if you're foreign, you're certainly not first in line to be compensated. If you're rich, you're certainly not first in line to be compensated. So who are those bank holders? Well, we as I said, we live in a world of two halves. Someone out there has got the trillions and trillions of dollars that exist. There are people in Africa, they're foreign central banks, they're foreign pension funds, they're domestic pension funds. It's no doubt Bill Gates and so on, with his billions of dollars of deposits, I suppose. So these people are going to suddenly find a proportion of their wealth, in the old currency at least, is wiped out. But perhaps they won't be so badly off after all when they lose half their wealth as it goes up in smoke, because they will say, that's okay because I own my yachts, I own my portfolio of properties, I own my equities, I have gold, I have Bitcoin, and all of that is now worth infinity in the old currency. So based on the accounting I've always used since the beginning of time, which is old dollars, I'm now rich. I'm just not nowhere near as rich as I used to be in the new currency. So it depends how you look at it.
It's in some ways it's like they're resetting the Ponzi scheme. And I used to live in Kazakhstan, and I heard a story from a man when they transitioned from Soviet Union to Kazakhstan and Russia during the breakup. Right during that transition, I heard the story of the father of a friend who was working overtime. It was late 80s, early 90s, I can't recall, and saving all this money. I mean, I felt so bad for the man hearing this story. He was working overtime to save all this cash, and then the reset came, and all of that savings was gone and went up in smoke. And so I think that's kind of like a mini version of what we're talking about here. And years ago, I just rushed to pay off my mortgage because I just didn't feel safe having debt, and I just kind of feel safer now, not having to worry. And as you say, some people might get lucky, or you might not. And I didn't feel safe with that gamble, and so I thought I'm just going to own my property, clear. And going forward, on your LinkedIn, I think you made a recent post. Again, I recommend people follow your profile on LinkedIn if they use that social media, but you discuss a gold price of $5,321 per ounce. I recently had a guest out of India who used to write for Doug Casey and writes for Mark Faber. He calculated up to $24,000 an ounce. And so, for this transition, what would you recommend? You've also written on your LinkedIn that in addition to equities, that you invest in private equity, precious metals, cryptocurrencies, property, art, tangible assets. And so just thoughts on things people would be wise to look into.
Well, I've been a wealth manager, as I said, for 47 years. And one of the principles of wealth management is you don't put all the eggs in one basket, even if you think that some of those baskets are the best things since sliced bread. And I know many of your listeners will have their own pet ideas, and it depends who I speak to. There are people who say, there's nothing in the world you need to think about except Bitcoin. There's other people who say, it's gold. Gold is the thing. Others say, but actually, silver's going to do better than gold. Then there's others who say, you're crazy talking about all that. Look, forget Bitcoin. Look, forget gold and silver. Look at what equities are doing. Equities have done X, Y, Z% over the last decades. And then someone else will say, that's all paper. You should have it in housing, because housing's a bricks and mortar. They can't take that away from you. It's solid. And perhaps the more people who are not so familiar with the financial markets would say, you need to own things, tools, a home extension, a nice car, or whatever it happens to be. So everybody's got their own pet idea of what is the best thing to do. My personal view is, as a wealth manager, you shouldn't be too focused or excessively focused on any one thing. You should be diversified. So if I just touch on a few of the asset classes, I do think that equities, despite the overvaluation of some of the very, very large companies, I do think equities have a great future long term. And if you own a share of a business before a reset and after a reset, or before high inflation and after high inflation, you will still own a share of that business. A bar of chocolate is still a bar of chocolate, irrespective of whether you buy it in Kazakhstan, America, or Ireland. It's a bar of chocolate. An ounce of gold is an ounce of gold everywhere on the planet. So the price might be very, very different depending on what the currency does. And if the currency goes to zero, the price is infinity. But you still own that item that you bought. So my advice is have a little bit of everything. I think from a gold and silver point of view, I've always said I kind of regret saying this, because I said for many years I've been saying 12% is the right number between gold and silver. That's obviously, looking at where we are today, way too low. If I could go back 2 years ago when I was first on LinkedIn and saying, have some 12%, probably I should have said have 20%, which would now be more like 30 or 40. Well, it'd be 50% now, wouldn't it? Because gold has doubled and so silver. Obviously, I also said when Bitcoin was way, way lower, it's down in the 20,000s, that having 2% exposure to Bitcoin would be a good idea. Well, I wish I'd said 10%, but but that was in the interest of diversification. And of course, I wanted to add in other assets, such as very small exposure to bonds, high yield bonds at the time. I also wanted to have equities. I had quite a lot of exposure to equities, and then, of course, real estate and other things. There are things like hedge funds and very complex financial instruments. So if you're a wealthy person, I think you should have a diversified portfolio. But what do I think is going to do well in that portfolio? I think all the tangible things, property, equities, gold, silver, Bitcoin. I know Bitcoin's not tangible, but I think it will do well. I think collectively, these things are going to be still around, whether we go into hyperinflation, whether we go into a default, whether we go into a currency reset, whether we go into a bail-in, it doesn't really matter. These things are going to be around, and they're going to be harder to take off you than if you have cash in the bank, or if you have bonds denominated in dollars, pounds, yen, or euro. So that's kind of where I would be saying people should have their assets. And a lot of people will say, well, I don't have any money to invest. Well, you're correct, but you have your pension fund, probably. What are your pension fund trustees doing? What are they investing in? In some countries, they have no choice. They have to buy government bonds. But in other countries, there is a choice. And you should be talking to whoever's looking after your pension fund to see if they're investing in something where you're on a hiding to nothing. Where you're on hiding to nothing, it's government bonds or cash. Because sooner or later, you're not going to get paid.
Yeah, and that principle of diversification is key. I remember reading one of Jim Rickards' books, and he laid it out. What you said in LinkedIn, property, art, cash, metals. I'm more of the opinion of 20% in metals. And someone on one of my subscribers on the Telegram channel said, who has money to invest in gold these days? I mean, you can buy a tenth of an ounce, a quarter of an ounce. You can buy, silver ounces aren't that expensive. And so, you can, a fraction of Bitcoin, you can buy whatever fraction you want of a little tiny bit of Bitcoin. So there are always different options. What your thoughts, right now underway is Brics in Kazan. I was in Kazan. When would that have been? 8 years ago, 2016. And what are your thoughts on this talk of multipolarity and Brics? And they're also talking about creating Bretton Woods alternative, or Bretton Woods 3.0. I was reading Putin's speech today where he says they're still a long ways away from this payment system. So that's not really ready yet. So just your thought on which way the wind is blowing here.
I've done my very best to try and find the agenda of the summit, which is taking place 22nd, 23rd, 24th this week. I couldn't find any agenda, and I really looked hard. I looked on the Russian websites as well, and translated them. I couldn't find it. So if there's an agenda out there, it's not widely circulated. There are rumors, and some people are reporting them as facts, that there's going to be a new currency called the unit, which will have 40% backing in gold issued by these Brics countries. I can't find any supporting evidence for that at all. So it's hearsay, but who knows? I think probably a discussion will be taking place as to how they settle between themselves without having to use the dollar, because obviously the dollar is a problem when it can be weaponized so easily. If you want to be able to keep trade going, you need to have a plan B, and plan B would be an alternative to the SWIFT system, an alternative to the dollar. So it's quite likely they will be discussing some method of exchanging national currencies, the Russian ruble, the Chinese renminbi, the Brazilian real, and Brazil, Russia, India, and the Indian rupee as part of the international trade. And maybe some others will come in there as well, like the Saudi Real, I don't know. But that's a system which never really worked when you historically, because countries would devalue their currencies one against the other, competitive devaluations, each one trying to get more for their money by devaluing the currency against the others and printing more money. So to make it work, it probably does need to be backed by something tangible, and gold. And if it happens to be 40% gold, where they say you've got to maintain a ratio of the amount of gold you've got to the amount of currency you've got out there at 40% or whatever the number is, that would be a positive thing to give that new currency, that new unit, as they're calling it. And I don't know if this is a real name, it's just speculation here. It'll give it some substance. But the question would be, can one country trade with another and choose to settle not in the new unit, but rather choose to settle in gold? Because I think that's the ultimate test of whether you have a workable system. Though, we prior to the US dollar coming off the gold standard, everybody believed that when they were trading in dollars, they were effectively trading in gold, because you could, at least up until 1971, take your dollars to the United States, unless you were American, in which case you couldn't. But if you were a foreign country, you could take your dollars to the USA and say, here's my dollars, please give me my gold. There's an official exchange rate, $35 for an ounce. Here's $35, give me an ounce of gold. Of course, you had to do it in much bigger quantities. And many nations did, in fact, do that. But that's when they had to close the gold window in 1971, because countries were changing their dollars into gold, and there were far more dollars out there than there was gold to back it. And so it got to the point where the French were sending one of their battleships into New York to pick up their gold. And the President Nixon, he said, well, if everybody takes their gold, you can't all have it. We don't have it. So we're going to temporarily suspend the gold window. So fine, send your battleship, but you can go back with paper dollars. You're not going to get your gold, because we can't, that would be unfair on all the other nations for whom we're guarding dollars, gold, same thing, which obviously now nobody thinks that dollars are gold at all. So what's going on? Why is the gold price rising now? Well, I think a realization is setting in that we are approaching this end game, and people are saying, I don't know how it ends. I don't know what's going to happen, but it doesn't feel good. It doesn't seem like the governments of the world are doing anything to rein in their profligacy, their overspending. They're going to continue to do that. That debt level is going to get bigger and bigger. The interest they're paying on the national debt is going to get bigger and bigger. I don't see an ending to it, but I feel it's not going to last. And therefore, I want to be in something a little bit more tangible. What's the risk with gold? Well, it can go down in national currencies, but it can't go to zero. But your national currency can go to zero. And if we look at the probabilities, what is likely to happen to a currency like the dollar? Well, at the moment, they're expanding the amount of dollars in existence by, let's say, 7 or 8% a year, far faster than the rate of inflation. And that number is going to get bigger and bigger. At least that's the probability based on what we know. And that's based on the government's own numbers, which come out of the Bureau of Labor Statistics. So that expansion of money, and by money, I don't just mean cash in circulation like M2. I'm talking about the level of government debt. When the government's borrowing money, if I have a bond from the government saying I promise to pay you in 10 years, that's still nearly as good as money. It's just a delayed money. So that the amount of money and delayed money is getting larger and larger at a faster and faster pace. It's well above the official rate of inflation, their number. It's well above what they pay you in interest as compensation. And I think people are realizing that that number is only going to get worse, and they'd like something else. So probability, if you have fiat-based money, whether it be bonds or cash, you are going backwards. Probability, if you're holding gold, it's still going to be the same amount of gold down the line. And most likely, because the currency is going down and the gold is not going up by very much, it's maybe 1 or 2% increase in supply per year, your gold is going to do better in price terms than your cash, which will never go up in value. You know that for sure. You know your cash will never buy more.
Yeah, and what you mentioned just earlier, the unit, it was, I believe it's called the unit coin, and Sergei Glaziev, the Russian economist, he was talking about that and how they want to create this interoperable CBDC Bridge blockchain digital ledger system. And I found the quote Putin in a meeting, I guess was today, said, as for the Brics common currency, we're not considering this issue. Its time has not come yet. We need to be very careful and act gradually without any rush. He does go on, though, to talk about the EU. And he says to speak about the creation of a common currencies, the economies, I suppose he's meaning the BRICS economies, which that's a lot of economies, must be highly integrated. So, and he says, this is why he says it's a long-term prospect. So, but what he's effectively talking about is basically modeling the EU, creating this supranational integrated project long term. And I guess I do also want to get your thoughts on the specter of war. You just any thought on the prospect of a wider war, given Ukraine, Middle East, Taiwan. Usually, when we have resets, you also have military conflict. Unfortunately,
geopolitics is not really my cup of tea. I listen to from time to time. I go to these conferences where you've got somebody who's a general from some government doing his speech about what's going on in the world. But there are far better experts than I in the world of geopolitics. All I can say is I am very glad to have been born where I was born, on a continent which has been free from war virtually throughout my lifetime. That's not been the case throughout all of history. So I've lived in a very lucky period, and I feel very sorry, terribly sorry for those who are in war zones. And I just wish that we could somehow find a way to declare world peace. That was the joke back in the 1960s. We're still, world peace is not coming, I'm afraid. And we just have to pray that it doesn't get worse and hopefully gets a lot better. That's my view on war.
And any thought on the topic of we cover a lot of stuff, tangible assets and all that, but this idea of internationalization. I've got 3 passports. Thoughts on whether that's something people should look into, or having additional residencies in case something happens, they can flee.
Depending on where you live, the need to have a second passport, a plan B, a plan C even, can be very high. So if you live in a country where the political system could be unstable, it would be a great idea to get yourself a second passport. But that option is generally quite difficult for those who are not rich enough. There are, of course, ways and means, and we find even our Western countries are filling up with people who've found their way in by one means or another. One of the ways in is through employment. Another way in is through marriage, of course, or family, as they call it. And of course, the other way in many countries is to buy your way in. You have to fulfill certain requirements, and those requirements can be very, very expensive, depending on the country you're going to. There are cheap, there's positives and negatives about every country. And I spent, not all the time, but a little bit of my time over the last 40, 50 years discussing with people where they have moved to, or why they've moved there, or why they plan to move there. So where do people go? I've seen people move to Singapore because that's got a favorable jurisdiction. Obviously, Dubai these days is extremely popular. You can buy yourself in, you have to buy some sort of property or do a business. Places like Malta, a little bit off the radar screen, not so easy to get to. Switzerland, where I am, it's very expensive to buy into Switzerland, but you get a lot for your money. And if you're paying millions and millions in tax, probably paying 100 or a couple of 100,000 to the Swiss government isn't such a bad deal to get yourself residency. But if you go to the UK, you can go in as at least today, you can still go in as what's called a res non-dom. Means you don't pay any tax on your foreign assets or foreign income. Many countries have similar arrangements. So I think it's a great idea, if you live in a troubled zone, to try and find a way to get yourself a second passport, or a member of your family to get a second passport, who would then potentially be able to bring in his relatives. also, of course, the question of where you put your assets. If you live in a troubled zone, you probably want to have some of your assets outside of that area. And this is one of the reasons why Switzerland is so popular. There are countless family offices set up here in Switzerland because it's seen as a place with a very, very stable government. I mean, the political party doesn't actually change from one year to the next like it does in most countries. It's a multi-party country. Everything is voted on. I get a vote on, whether you're allowed to hang your washing out on Sundays. Any law gets voted on. And of course, we have a rule of law. The law is quite clear. It's possible in contracts to apply foreign laws if you want to. So if you want to apply UK law, and there's a huge amount of UK law used in contracts in Switzerland, you can do so. It's a very safe country. You don't worry crossing the street with a couple of $100,000 in your pocket, or you wouldn't worry because nobody's going to mug you. It's not like some places where you think the risk of getting mugged is 1 in 1,000. That's a risk I'm not prepared to take. It seems very safe. So you get what you pay for. You'll never get perfection. Every place has got its disadvantages too. That might be you're in a place which is difficult to travel to and from. It might be that the taxes are very high or higher than you expected. It might be there are safety concerns, and there could be many other issues depending on where you go. But yeah, it makes sense to move around and have and keep some of your assets outside of the country where you live. If you live in a country where there are worries of invasion.
Yeah, I sometimes tell people it might be wiser just to stay where you are. But it's different, as you said. It's for different people, in different situations. Just real quick on Europe, a lot of people talk about this decline, deindustrialization of Europe. Do you think Europe's going to be okay, or do you think it's going through a downward cycle or spiral?
I think it's struggling, but these things come in cycles. One of my great hopes is the advance of artificial intelligence, which I think will enable mankind to have a lot more for a lot less. I can see that happening in many ways. And obviously it's not new. It's not just artificial intelligence. It's been going on ever since industrialization started. And, then we had robotization, and now we have social media and technology. But I think there's a lot more to come, probably a lot more than we've already seen to come. And I think that could benefit mankind. So I don't think we necessarily go into an end of the economy, end of the world type situation. So I'm optimistic, but I think short term there are problems.
Well, yeah, I did notice that you are generally more optimistic and upbeat, which is good. And we've covered a lot. Is there any other final thought for us? Anything that we haven't covered that you think is important to mention?
Well, I suppose there's just two things. One, we've got the election coming up, and we've got the prospect of lower interest rates from the Federal Reserve. What I noticed was a month ago they lowered the interest rate by 0.5% at the short end. But those who are watching it may have noticed that despite the lowering of short-term interest rates, the longer-term interest rates, that is the 10-year bond, for example, are 0.5% higher than it was on the day they did that. So we have what's called a steepening of the yield curve, where short-term rates are falling and longer-term rates are rising. Now, draw whatever conclusions you like out of that, but I think what's happening is that people are saying these shorter-term interest rates will lead to an increasing probability of inflation down the line, and therefore I need to be paid more to invest my money for 10 years than I need to be paid to invest it overnight on the money market. So inflation is coming back with a vengeance in a couple of years.
And just something interesting I read from Financial Times just before we jumped on the call. Larry Fink of BlackRock, he came out and said that the outcome of the looming U.S. election between Kamala and Donald Trump really doesn't matter for financial markets. And so there you go. So fantastic conversation, Clive. Is there any project, anything you want to mention, website or best place to find you?
I'm only on LinkedIn. I don't do the other social media. If any of your listeners or viewers have a question on a specific financial topic or something related to tax or immigration or wealth generally, I'm very happy to answer. I obviously don't want to get into discussions about whether I want to buy gold from Africa or invest in somebody's fund. That's not really very interesting for me. But if you've got a question, you want to know something like, should I pay off my mortgage or something? I'm very happy to help you see if your thought process is working in the right way. I don't actually give financial advice. I won't tell people you've got to buy this stock or that stock or gold or this or that or the other. Obviously, I think these things could be very good investments, but really, I'm just trying to help people see the way. So feel free to write to me on LinkedIn if you have any questions. Clive Thompson is my name.
All right, I'll put the link in the description. And again, thank you for being on Geopolitics and Empire.
Thanks very much indeed, Hervoyer. Bye-bye now.